Welcome to the Compass e-learning series. This session includes an overview of the account projections, which is available in all versions of Compass. The account projections is the main design area which allows you to model balance sheet volume, interest rate pricing, and income and expense. You can access this screen by clicking the button on the navigational toolbar that looks like an adding tape, or by selecting Projections, then Accounts from the top menu bar. The list here on the left represents your chart of accounts. The yellow folders indicate summary level data and can be expanded or collapsed to show the individual accounts within each category. Clicking on an account name will open the Projections tab. This is where forecasting is performed and immediate calculations are made. The Projections view shows history in gray and 5 years of forecast in white. The columns of data that you see here and the number of tabs that you see up top will both vary account to account based on each of their properties. I am currently in a maturing loan account, and the columns you see represented here are the most that you'll see in any Projections tab. They are EOM balance, that represents end of month balance, your rolling volume. New balances. This is your anticipated monthly additions, like your pipeline. Offering rate. This populates your expected future interest rates based on your pricing models. Total maturities and total maturities exit rate. This comes from your maturity tab. It's the sum of your total maturities for the account, as well as what weighted average rate those maturities will roll off at. The interest and yield. These are both calculated from your forecasted volumes and rates, and if applicable, your existing portfolio maturities. As you change your forecast, rates, or maturities, you will continuously see your income and yield recalculate. Average balance. This is a representation of your EOM balance column. It looks at your last month-end balance plus this month-end balance divided by 2. In some accounts, like our Now account here that doesn't have maturities, you may find you only have 4 or 5 of these columns. Regardless, the column headings will still match up and behave in the same way as the loans. Compass also maintains a mathematical relationship between these elements to accurately reflect real life, just like we saw in the average balance column. Another mathematical relationship is the EOM balance and new balance columns. To solve for the projected end-of-month balance in a non-maturing account is end-of-month balance equals previous end-of-month balance plus any new balances. Or, alternatively, the new balance will be the difference between last EOM balance and this EOM balance. Let's go back up to our maturing loan account to see how to solve for those end-of-month balances. Here, in a maturing account, we take the cash flows into consideration to solve for the projected balances. The EOM balance is previous end-of-month balance minus any total maturities for this month plus new balances for this month. Or alternatively, your new balance for this month will equal this month's end-of-month balance minus previous month's ending balance minus any total maturities for this month. So that's one way you can change your end-of-month balances or your new balances, and either column will recalculate for you. Another mathematical relationship is the interest and the yields. As you change your new volumes, your rates, and if applicable, your total maturities, the interest income and the yield will immediately recalculate so you know the impact. On top of that, you can also then view the bottom of this screen for an annual recap of the changes you just made. Once you decide on what trends you want to forecast, there are options to help you populate these end-of-month balances by viewing the forecasting tutorial. So this first projections tab you see here will be your main area of focus in Compass. The following tabs to the right are there to help support the projections. Next, we have the Budget tab. It contains a copy of your final locked budget for each account, and this tab is for viewing only. No forecasting calculations happen here like in the Projections tab, so never type directly here. The Maturity tab. This displays contractual maturity data from your download file, as well as anticipated prepayments based on your prepayment models, and any new maturities based on your forecasted monthly additions. This total maturity column here is what gets transferred to the Projections tab to help for more realistic forecasting. Next, we have the Repricing tab. This tab only appears if the account has repricing characteristics that are downloaded in the model, such as ARM loans. This tab will provide you with actual and simulated repricing information, including volumes and new rates. The Variance tab, much like the Budget tab, is for viewing only. Here, it compares the actual and budgeted amounts and gives you the ability to review how your what-if scenarios or your forecasted plans will still compare to your budget goals. The Fed Funds account is used to always keep the balance sheet in balance. You can view your overall Fed Funds position at any time from any balance sheet account by clicking on this Fed Funds tab. Fed Funds are for viewing only, and you would need to reforecast the balance sheet in order to change the balances you see here. The last tab is the Notes. The bottom right corner of this screen has an Insert Date button and will populate with the time and date of the note that you're adding about the changes you're making to this account. This can be very beneficial for documentation purposes when changing assumptions. Variation of the tabs that you see here will be the most that you see throughout the projections. But I'd like to move up to a security account to review another tab there called Callable. Securities in some CDs will also have a Callable tab. This tab tracks callable securities and borrowings by CUSIP. It has multiple columns that provide detailed information on the CUSIP or note number. Compass will use this information to determine if and when these items should be called. It will call them here as a scheduled prepayment. Now that we've discussed the projections in the balance sheet area, let's take a look at this tab on the income statement side for non-interest income and expense. The layout of this first projections tab is slightly different, as there is only one balance to track and the time periods have now switched to a horizontal view. And based on the properties of this account, you can see there are fewer tabs up at the top here. But the tabs that remain do function in the same way as the balance sheet. Locked budget, variance to actual, and notes that can be recalled on for future reference. In this session, we reviewed the tabs and columns of the accounts within the account projections area for all Compass models. Thank you for taking advantage of our e-learning series. Additional information and tutorials are available through the link shown.